Welcome to this explainer. Look, if you're trying to maximize your travel points and cash back without hitting a brick wall at the bank, you're in the exact right place. Today, we're opening up the Master Strategist Game Manual for conquering credit card approvals. Our ultimate boss battle? Demystifying Citi's incredibly strict 865 rule. But to really get there, we gotta understand the whole battlefield first. So, let's jump right in.
Picture this for a second. You're our stickman protagonist, standing right in front of a giant bank vault, holding a pristine 800 credit score, and a massive denied stamp just slams down right in front of you. Have you ever felt that exact frustration? It's wild, right? You've got perfect financial stats, zero debt, and yet, boom, the bank's automated system just bounces you at the door. So why exactly does this happen?
Well, it all comes down to the unwritten rules of the credit card game. I like to think of the major banks, Chase, Amex, and Citi, as final bosses in a video game. They all have these hidden defense mechanisms, automated algorithms, and really strict internal policies. They're basically designed to stop aggressive churners and minimize their risk. So to actually win this game and maximize your rewards, you've got to learn how to bypass these specific defense systems.
All right, Level 1, Navigating Chase 524.
So our very first major hurdle is the infamous Chase 524 rule. Basically, if you've opened 5 or more personal credit cards across all banks in the past 24 rolling months, Chase is going to automatically decline your new application for most of their rewards cards. And here's the kicker. It literally doesn't matter how high your income or your credit score is. Because of this wall, experienced strategists know you absolutely have to prioritize applying for Chase cards early in your timeline, right before you hit that 5-card limit.
Now, what's really fascinating here is exactly what Chase actually counts. People make rookie mistakes with this all the time. First off, they count personal cards from any bank, not just Chase. They also count retail store cards that report to the credit bureaus. And a huge, sneaky trap? Authorized user accounts. Yeah, even if you aren't financially responsible for the bill, if it's on your credit report, Chase's algorithm is going to flag it. But on the bright side, things like auto loans, mortgages, and most small business credit cards, those don't add to your 524 count.
Moving on to Level 2, Escaping Amex Pop-Up Jail.
Imagine suddenly finding yourself trapped behind literal iron bars slamming down over your application. This is what the credit community lovingly calls pop-up jail. If Amex's internal system decides you just aren't profitable enough, maybe you haven't put enough spend on your existing cards, or you've closed accounts a bit too quickly in the past, a pop-up warning appears. It basically tells you that you're ineligible for the welcome bonus before they even perform a hard credit pull. Honestly, it's kind of a blessing in disguise because it saves you a totally wasted credit inquiry if you aren't going to get the points anyway.
But beyond pop-up jail, Amex also has these strict physical speed limits on approvals. The really crucial thing is knowing their velocity rules, specifically the 1 in 5 rule and the 2 in 90 rule. Basically, you can only get approved for one Amex credit card every 5 days. And zooming out a bit, you're permanently capped at a maximum of 2 credit card approvals every 90 days. So if you try to submit a third application on day 89, yep, that's an automatic denial. No way around it.
Which brings us to Level 3, Mastering Citi 865.
This is the ultimate puzzle. To completely conquer the Citi ecosystem, you've got to beat that first ticking clock, the number 8. See, Citi will only approve you for one personal credit card every 8 days, meaning if you apply for, say, a Citi Premier today, you have to wait a minimum of 8 full, complete days before you even think about hitting submit on another personal Citi card.
But wait, it gets even more complex. The second critical number you need to burn into your memory is 65. Citi strictly limits you to just 2 personal card approvals within a 65-day rolling window. If you try to sneak a third application in on day 60, you're getting instantly rejected. And again, it literally does not matter how flawed your credit score is.
Okay, so let's walk through the exact optimal timeline to beat this system. Step 1, apply for your first personal Citi card. Step 2, wait a minimum of 8 full days. Step 3, apply for your second personal Citi card. Boom, now you've hit your cap. Step 4, you absolutely must wait until day 66 to safely apply for a third personal card. Oh, and if you're eyeing Citi's business cards, that is a totally different timer. You've got to wait 95 days between business card applications. But if you follow these steps exactly, you'll completely bypass their automated defenses.
Let's just summarize this entire landscape into one tactical cheat sheet. Chase restricts you to 2 cards per 30 days, capped overall by 5 on 24. Amex holds you to 1 card every 5 days, capped at 2 every 90 days. And Citi runs on their highly unique 8 and 65-day clocks. Seriously, memorizing this matrix right here, that is exactly what separates a total novice from a true master strategist.
All right, level 4, timing your next bonus. Because let's be honest, getting approved is only half the battle. The real reason we play this game is to secure those massive welcome offers. To do that, you need to be hyper-aware of something called lifetime language. American Express heavily enforces this rule, basically stating you can only receive 1 welcome bonus per specific card in your lifetime, which, by the way, they generally define as about 7 years. Plus, they've recently rolled out these tricky family rules, or little brother rules. If you jump the gun and get the premium platinum card first, they'll actually block you from getting the bonuses on the lower tier gold or green cards later on. You have to strategize your path from the bottom up, otherwise you're leaving thousands of points on the table.
Now, Citi has their very own flavor of family rules. Instead of lifetime bans, they enforce these really long waiting periods. Generally speaking, you've got to wait 24 to 48 months between earning bonuses for cards in the exact same family. So if you earn a bonus on a Citi American Airlines card or maybe a thank you points card, that specific family of cards is totally locked out from giving you another bonus for up to 4 whole years.
But what completely shifts the game board are the massive rule changes Chase just dropped in 2026 regarding their premium Sapphire cards. Get this. They completely eliminated their famous 48-month wait rule between Sapphire bonuses. They also killed the one Sapphire rule, which means you can finally hold both the Sapphire Reserve and the Preferred simultaneously. Crazy, right? But here's the catch. To compensate for all this freedom, Chase transitioned these cards to a strict once-per-lifetime bonus per card, very similar to Amex. You can get each bonus exactly once, and that's it forever.
Next up, level 5, boosting your credit power.
Obviously, managing your FICO score while playing this game is absolutely critical. But notice this. Hard inquiries, which you get every single time you apply for a card, only make up 10% of your score. The vast majority, a whopping 65%, is simply your payment history at 35% and your credit utilization at 30%. Honestly, if you just pay on time and keep your balances low, your score will naturally absorb those temporary hits from applying for new cards like it's nothing.
And a total master tactic for keeping that utilization low is proactively requesting credit limit increases. The secret here is knowing how the banks actually process these requests. Check this out. Citi, Amex, and Chase all use soft pulls for limit increases. This is incredible news. It means you can literally ask them for a higher limit every 6 months, and it carries zero risk of lowering your credit score. Capital One, however, they frequently use a hard pull for that, which definitely will ding your score temporarily.
So, if you want to systematically trigger those soft pull limit increases from Citi, Chase, and Amex, you just need to follow these steps. Make consistent on-time payments, pay off your statement balances in full whenever you can, keep your overall utilization under 30%, and definitely proactively update your profile whenever your personal income goes up. Doing all this expands your total available credit, which actually naturally improves your FICO score over time. It's a win-win.
All right, we've navigated the Chase 524 gauntlet, we've successfully escaped Amex pop-up jail, and we've completely mapped out Citi's strict 865 ticking clocks. You are officially equipped with the master strategy. So, I'm going to leave you with this final provocative thought. Looking at your own personal financial goals, which bank's hidden maze will you conquer first to maximize your travel rewards? Thanks so much for joining me on this explainer, and hey, happy strategizing.